Aloha, hey, it's Julie Zimelis, 365 Hawaii, and with Real Broker. And today we are doing the March update, island-wide update with all of our wonderful real estate professionals here. We have Joe Eagan from Wynn and Eagan Team giving us the mortgage update, and we've got Lance Owens with Luva, and we've got Jana Mahoney with KW. We got Amber and Delania, both with Real Broker, as am I, and we are the ones that are going to be giving you guys the update on all parts of this island. And we are going to start actually with Joe with the mortgage update, so you guys can figure out what the heck happened in rates and how's it going to affect the market. So, Joe, kind of give us what's going on with that department. Go for it.
Sure. Yeah. So it's good timing this week. The Fed actually met March 20th. They agreed to leave the Fed funds rate unchanged, which was slightly positive for mortgage rates this week. We saw them kind of creep up to about 7%, crept a little bit below 6 or high sixes at this point. The favorable thing that the Fed dot plot, which is the Fed 12 members, give their projections on what they think the interest rates or what they think they're going to do with the interest rate for the remainder of the year. And they actually expect 3 rate cuts this year. Okay. Nobody knows when. Everybody thinks about 75 basis points for 2024. So they showed a projection of 2.25 point interest rate cut by year end of 2026. So the Fed's fund target range right now is 5.25% to 5.5%. The goal would be to have it end at 3.3% to 3.25%, which then would have a drastic cut in mortgage rates. It's not a direct correlation to mortgage rates, but it would have a favorable impact to mortgage rates. So I think rates are going to stay a little bit higher for a little bit longer. However, I'm hoping by the end of 2024, the Fed will have 3 rate cuts. Again, I don't know when, but that's their projection.
So what are you thinking, like down to 6%? So
yeah, Fannie Mae came out. Their projection for interest rates for Fannie Mae was 5.9% at the beginning of the year. Yeah. They've already moved their projection to about 6.25% to 6.4%. So they moved their projection up a little bit. So my guess would be low sixes by the end of 2024.
Low sixes, okay. Well, it's better than high sevens. How's that? Okay.
Right. A lot of changes, so hopefully some good news by the end of 2024.
Lance?
So, I mean, I'm getting a feeling that this is kind of our new normal, right? We're going to be, I mean, there's not going to be anything earth-shattering coming up in the next year, and it's kind of the new normal, right?
Yeah. I mean, their thing is inflation with maximum employment, right? Inflation has been hovering around 2.5% now for the last 9 months. They have a goal of inflation for 2%. Now ask me where 2% came from, and nobody really knows, right? But they have a goal of inflation of 2%. So looking at projections on inflation, I think it's going to be really hard for the Fed to hit a core inflation number of 2% in 2024. I just don't see it. I think they're going to get close, but I don't see them hitting their goal. So barring something, banking industry with commercial real estate doing what it's doing, or major unemployment, I think it's going to be the new norm for a little bit longer than people expected.
Okay. So any just tips that you want to give to people who are thinking about getting mortgages then? Probably don't wait too long because things aren't going to change that much.
Don't wait. Obviously, have a conversation with a lender. Make sure the biggest thing that I tell people right now is affordability, right? Let's get the interest rate out. Let's get the purchase price out. Let's make sure you can afford the payment. So have a game plan. Speak to somebody sooner rather than later, because I do anticipate when rates go down, you're going to have an influx in buyers, right? And we still will have an inventory problem. Rates can decrease, but until we have rates decrease plus more inventory, that's really where we're going to see kind of that balance in the market, right?
Mhm.
So until, even if rates decrease, we're still going to have an inventory issues, which will then drive prices up, although rates go down, right? So speak to a lender, have a game plan in place. There's always things that we can be doing to get yourself in a better position. My goal would be to look at affordability, structure a budget, work on credit, work on savings, live within your means so that we can, owning a home is still one of the best ways to build wealth in America, right? I will always believe that regardless of an interest rate. So speak to a lender so that you can get that game plan in place is my biggest thing.
Very cool. Does anybody in the panel have any questions for Joe? That you might have, your people might be asking you questions about what's going on with the rates or getting mortgages? Nope. Okay. Let me ask you real quick, Joe. Are people still doing the whole, like, marry the house, date the rate?
Yes. Yeah. And that's something, honestly, that I'm looking from a financial point of view, right? Knowing that anybody that purchases now probably won't be in their mortgage long term. So that actually helps me from a financial standpoint to say, okay, let's structure a mortgage knowing that you're probably not going to be in a mortgage long term. So usually the more down payment, it will help you reduce the mortgage interest that you would pay over a longer period of time, right? But knowing that probably you're not going to be in this mortgage long term, we can look at different ways to structure the mortgage to have the most banks for its buck financially for you. Not just, maybe not put 20% down. Let's reserve some cash, put it in a high yield savings account or an interest account where it's going to earn more money for you, knowing that 2 years from now in 2026, we're just going to refinance and get a lower rate.
That's right, 2026. So it keep getting pushed out. It's like later this year, 2025, no, 2026. But with 2 years with a 30-year mortgage. So that's great. That's good advice. Sure. Okay. Yeah. Then let's do our real estate market update. Andy Madrid has now joined us. Thank you, Andy. So Andy's going to be giving the information for South Kona. But let's start with Amber. Why don't you give us information about what's going on with East Hawaii?
Okay, so let's talk about some of the market stats over in South Hilo and in Puna. So let's start with median home value, see where we're at this month. So in the Puna district right now, in the month of March, all of the homes that sold had a median sales price of $360,000. So that is actually, let's see, it is a little bit down from where we were at a year ago. And it is, a little bit up from where we started the year at. So not too much of a change in the Puna district. Again, this is the district that I always like to point out. It includes multiple different lava zones that drastically change the median sales price of a home. So that also includes a lot of the risky lava zones 1 and 2. So while we're talking about Puna and median home sales price, I do want to talk a little bit about some of the lava zone 3 neighborhoods that most of the buyers who are watching this are probably looking in, because the median home price for most of the homes there is going to be higher than $360,000. So the 2 most popular neighborhoods that I find a lot of the 365 Hawaii buyers look in are Hawaiian Paradise Park, and where there's more inventory than anywhere else pretty much on the island right now. And then another really popular neighborhood that I'm working in a lot is Aina Loa. And so just to give everybody an idea of what home prices in Lava Zone 3 can cost, the lowest listing in Hawaiian Paradise Park currently active on the market right now is an unpermitted dome. So it's essentially a piece of land that you're buying because you can't get a mortgage on that. That's listed for $164,000. The most expensive thing active on the market in Hawaiian Paradise Park in the Puna district is just shy of $2 million by the water in Hawaiian Paradise Park. So there is quite a range. I like to point that out. A new construction, 3 to 4 bedroom home in Hawaiian Paradise Park right now, the median price is about in the 600s and 700,000s. So much higher than what you see across the entire Puna district. And then as far as Aina Loa goes, that's another really popular neighborhood in Lava Zone 3, and you can get a new construction home there, 3-bedroom. It's not as many 4 bedrooms there, but those start in like the 300,000s to 400,000s for the most part. So we have quite a range over in the Puna district. Days on market right now are about 45 days, which is a little lower than we've seen. So things are moving a little bit faster than in months previous. And then let's see, did we say, let's move over to South Hilo now. So in the South Hilo district, the median home value right now for residential single family homes is 595,000. And that is an increase from where it was a year ago, where it was 485,000. And yeah. So, there aren't as many sales in the Hilo district as there are in Puna. So sometimes, if there's like some one-offs that can kind of screw our data. That's why we do these updates every month and we kind of look at the longer trends overall. But yes, 595,000, and that's an increase of 110,000 from a year ago. So that it is quite a bit. And then our average days on market in South Hilo are also 45 days right now. And that is actually a little bit slower than the month previous and a little bit quicker than a year ago, where it was 38 days on market, and then a year ago, 50 days on market. And then, we forgot to mention list of sales price. So, a lot of people want to know if they need to offer higher or lower. It is going to be case by case basis. That's why, pairing up with a knowledgeable real estate agent will really help you on that. But as far as the stats go, the Puna district is about 96% list to sales price right now, and South Hilo is 91.5%. So those are your stats for East Hawaii.
There we go. Hilo's on sale by 10%, 9% off sales.
Yes. We're having a sale.
There we go. Okay. Good job. Thank you. Then let's go around the other part of the island. Andy, are you in a position to give us update on what's going on in the south part of the island?
Yeah, I'll get there.
Okay.
I don't know together. I just came off of, I've been on the east side today, showing property.
Yeah, the hot market over in East Hawaii. Yeah. Okay, so here you go. You're the spotlight.
So what's going on in the Ka'u district, which, we get, we have big swings in our market here. We've got a lot of unpermitted homes, like we've talked about in the past. We've got permitted homes. We got a lot of land. So when we look at, what happened in the last, say, since first of the year, or from, basically from February to now, there are 33 sales in the Ka'u district. Sales prices, they average between $68,750 and shockingly $929,000, which is just a huge number for our neighborhood. And that was, of course, in Discovery Harbor. Because of the big swings in the price points, it pushes our average price down, which today is $360,840, and our average days on market is 97. So quite a bit longer time on market than you're going to find in some of these other areas of the island. But it was interesting. Our list price sales price ratio is 96.5%. So it's still strong. And where, comparing, other parts of the island, we're kind of on par with that. So, then if we take out Discovery Harbor, because that's a little bit of a unique situation type of homes that are over there, we have 20 sales, and that would be in the greater Ocean View area. It'd be Ocean View Ranchos, Kulakai View Estates, Kona Garden Estates here, 20 sales again. So that bottom price point, $68,750, an unpermitted little cabin here in Ocean View. But we had a sale of $800,000 right here in my neighborhood. putting the average sales price of $264,262. 98 days on market, but again, a 96.04% sales price to list price ratio.
Mm.
So it's reflecting what we're seeing in a lot of other neighborhoods. Just not a lot of inventory, but a lot of strong sales in this neighborhood. You know, we have historically been, if you're trying to get on island and you want to do it inexpensively, we're pretty much got the cheapest land anywhere.
Mhm.
As you see, we've still got some home prices that are, priced at 875, sold for 800. Kind of amazing because, now we're at price points that people are living in Kona for, living in some other neighborhoods that we typically would see as being, closer to services.
Mhm.
And we have a lot more buyers for other neighborhoods, but we're still getting some strong price point down here.
Mhm.
So that's kind of what's happening here in the Ocean View, Ka'u market.
Okay. Hey, so can you give us a little bit of some Scoobies on Discovery Harbor? I've got people who want more of a rural lifestyle, let's say, and but they don't want to be in Lava Zone 1 or 2, and Discovery Harbor is in Lava Zone like 7 or something, right?
6. Yeah, it's Lava Zone 6. So yeah, it's a golf community, but they don't require you to have membership to the country club.
Mhm.
You can get a social membership or you can get a golf membership.
Mhm.
The lots are not big,
Mhm.
and there's a lot of new construction going on there. And prices on new construction are going to be mid-sevens and up, for that neighborhood.
Okay.
The average lot's like 14,000 square feet, and the climate's great. I mean, I really like the neighborhood. It's quiet. A lot of retirees will go there. A lot of people that are downsizing. I just closed a deal today in Discovery Harbor.
Mhm.
Buyers are moving from Alaska down there. Much better weather.
Mhm.
On the golf course, nice big home. Um, pretty much they paid almost asking for the property in that neighborhood.
What was the asking price on that?
745.
740.
740.
Okay.
Close
Okay.
at 7. Close at 725.
Okay.
Can I shamelessly throw a plug in for my listing down there? We just
Yeah.
had a price reduction. It is at 66.9 on a lot that backs up to the golf course. And of course, it's got county water and power.
Yeah, that's the other thing people like there. You're on county water, you got power, you got paved roads. The nice thing is so there's a lot of absentee owners. They're going to come in for just the winter. So the HOA, which is incredibly reasonable, what is it down there? It's like 295 or some crazy. It's really low. But they have security. Security goes by those properties that are unoccupied twice a day, every day, and checking on to see if the house secure. If there's an unfamiliar car in the driveway, they will stop, because when we were looking at the property, they didn't recognize my car. They stopped to see who we were.
Perfect.
So that's really a nice benefit for people that are buying down there that aren't going to live here full time.
Yeah. Especially with all these news stories of people squatting in these houses now. They're breaking in.
And they set up a food truck down there in the parking lot for the country club. The Bomb Barbecue's down there. Really good food.
Oh, good.
Jason's food's awesome. Yeah.
Okay.
Jason's down there on weekends, cooking up some brisket and barbecue and all kinds of good food.
I
Okay.
drive down there just for that.
The brisket, the barbecue. Okay. Okay. It seems like, yeah, it's just people are looking for affordability, but they're also looking for one of the people for our people said that he couldn't take the wind of Waikoloa and was worried about, just housing prices in Kona and where else could he go? And so I said, maybe check out Discovery Harbor. So it's okay. Okay. Okay.
Nice community. Really, it's great walkability for people who like to do that. And the weather is really nice. Nice trade winds. Really nice down there.
Yeah. Yeah.
Do they still offer the golf course walk?
I don't know. I'm not sure. The golf course is really nice. I don't see a whole lot of people on it, but it's just a nice course.
Yeah. Okay, there we go. Okay, if you guys want to learn more about Lance's listing, if he sends me the information, I can drop it in the description for people who watch a YouTube video later on. So we do for each other here. Okay, so then let's go consistently around the island here. Let's do, everyone's like this, who, me, Gemma. So
Aloha. I am in windy Waikoloa right now. And
yeah,
it
we
is-
don't mean to you know, slap your stomping grounds there.
It's okay. It's okay. I went paddling this morning and we couldn't even get out of the bay because it was so bad. Okay, so I'm going to start with Kohala Ranch, Kohala by the Sea, which is a lovely neighborhood kind of on the north side of the island by Kauai. And there are 5 active residential listings there. They range from $1,875,000 to $4,600,000. Really, really lovely, great ocean views down there. So now I'm going to skip to Waikoloa Village and let's talk
Wait,
about.
did you mention what the price was on those Kahala properties? Did you?
Well, the average is $3,173,000 for the 5, but they go from $1,875,000 to $4,600,000.
Okay.
Yeah.
Okay.
Let's see, what is the average days on market? 93.
Okay.
Yeah, so hanging in there. So Waikoloa Village in Monolani residential. Right now there are 33. So last month we had 35. So kind of hanging in there. 6 are Monolani and 27 are Waikoloa Village. So the ones in Waikoloa Village range from $799,000 to $1,922,800, and the $1,922,000 is the new construction that we talk about down at the end of the road. And the 6 in Monolani range from $5,600,000 to $29,900. Average days on market is 119.
Ooh.
And we had 6 that sold in February with an average sales price of $1,755,000. And the sale to original price is 95.2. So they're hanging on there. You know, that's gone down a skosh compared to how it was before. In Waikoloa Village condos, let's see. Hang on just a second. There we go. There are 24 on the market right now, and they range from $420,000 to $3,350,000. So you have a pretty big range. And let's see, average days on market are where is it? 49. So you know, you've got some really nice condos right now that are active. I saw the one that's up at Kolea. That's, what is it?
$4 million.
Yeah. Oh man, it was nice. It had this amazing view of Anaiho Omalu. So it was very pretty. It had its own private elevator. Just lovely. Waikoloa Village condos sold last month. There were 5 and they were from $369. What was that? To $470,000. Oh, I'm sorry. Yeah, that's Waikoloa Village. That's the condos that are in the village.
Mhm.
And the average days on market was 62, and the sale to the original price was 95.7%.
Okay.
So that was kind of lower than it's been as well. Monolani condos that were sold, I kind of broke those out because there's a pretty big difference between the Waikoloa Village and the Monolani, even though we're in the same tax area, the 368 tax key. So Monolani had 14 that sold last month, 717 the lowest, 2,126,000 was the highest. No, I'm sorry, 5,750 was the highest, with the average of 2,126,000.
Wow. Okay.
And the days on market was 45. So the sale to original price was 97.5% in Monolani. Puako, we still have 3 listings. I think we added one. Nothing sold there last month.
Mhm.
And they range from there's like 4,000,005, 6,000,875, and 9,000,965. Zero sales. Waikoloa Resort condos. So not the village, down in the resort area. We have 14 for sale right now that range from 949 to 4,250,000. Average days on market right now is 73, with an average of 2,303,000. So prices hanging on there. Waikoloa Resort sold last month, 7. There were 7. Average days on market 61. Average price $1,116,000, and sale to original price. Get this, 92.32%. So that's different. There were 2 that sold in the shores, 3 in Waikoloa Colony Villas, 1 Waikoloa Beach Villa, and 1 Kolea. So that's what happened in the resort. And then I have Waikoloa and Monolani Residential. And oh, well, I've already talked about that one. That one's the 33.
Yeah.
So
we just like, I think last month or the month before, it looked like the condos up in Waikoloa Resort were, kicking pretty fast. They were like, they certainly weren't getting a 92% sale to listing price, right?
Right. Yeah. Yeah. And it seemed like they were selling much quicker too. The days on market has increased for those as well. And it seems to me like, and I'd have to dive into it a little bit deeper, but it seems to me like if the prices are reasonable, maybe some of the prices that have gone on the market recently have been a little high. And those are the ones that I see sitting. They're still selling pretty quickly if they're priced right.
Okay. Okay. So maybe go in there and ask for a deal on some of those ones that have been hanging out for a while, right?
Right. Yeah, absolutely.
Yeah. Okay. Thanks, Jana. Okay. So then let's go up to Delaney. Do you want to do your special neighborhood spotlight that you do so well?
Sure, we can jump in on that. It's actually pretty quiet, not a lot of stats this time. So Pualani Estates, we'll look at that one first. There is nothing active, nothing under contract. But there were 4 sales over January and February. Look at March next month. The sales for January, February, of the 4, the lowest was 848,000. It was on the market 118 days, and it sold for 32,000 under ask price. Next one sold for 960,000. It was on the market for 15 days, and it sold for 15,000 under asking price. Next one sold for 1,070,000. That was again on the market 19 days, 28,000 under. So everything, pretty much everything of those 3 was under asking. And then the highest one sold for 1,140,000. That was the extra large floor plan. So we haven't seen them get quite that high too often. That was on the market 25 days, and it did sell at asking price. So nothing active, nothing under contract. So this month we'll see, the next couple of months probably won't be a lot of activity in there. Then we're going to look at Ali'ilani. That's the one condo that we're checking out. There's 1 active and 1 in preview right now. So the active listing is at 589,999. So basically 590,000. It's been on the market 33 days, and it has had a $10,000 price reduction. The one in preview is listed at 535,000. There is one that is under contract. It went under contract after 7 days, and that is listed at 559,000. And then January and February, there were 2 sales, one at 512,000. It was on the market 2 days and sold for 2,000 over asking. The other one sold for 525,000. Was on the market 4 days, and it sold for 5,000 over asking. So 2 lower priced ones sold really quickly over asking. Very competitive there. 589.9 is sitting. And then last, we're going to look at Lukahi Makai. There is nothing currently active in that neighborhood. There are 2 under contract. One is listed at 988,000. It's been on the market 120 days with no price reductions. The other one It's listed at 1,099,000. It's been on the market 14 days. Again, no price reductions yet on that one. And then there were two sales, January and February. First one is at 890,000. Was on the market for 33 days, and it sold for 9,000 under asking price. The next one sold for $1,082,500. So $1,082,500. Was on the market 15 days. It sold for 87,500 over asking. It's a VA, so I'm thinking there might have been some concessions in there because that's a pretty high over ask, especially 15 days on the market. But yeah, so January, February were pretty quiet in those neighborhoods, and prices, they're sitting a little bit longer and, dropping a little tiny bit, but everything's staying, somewhat consistent to what we've seen. No big swings up or down.
Okay. Which kind of goes with what you're I'm seeing like on the national market. They're basically saying flat rate, flat, flat, just not a lot of stuff going on. People are just kind of, okay. Okay, dokie. Thank you. Then that brings us to, Lance. Lance is going to tell us a little bit more in depth in terms of what's going on with the North Kona market. And this is always the one that we kind of say, this is where this usually
Nobody likes my report.
We've got a chance to get a lot of the story from everybody else, but this one's going to be that story that we're going to do. So I muted you accidentally. Can you unmute that?
Yeah, I was like, well, Julie,
no, I'm trying to spot you. Bring Lance up to the forefront. Let him tell the story.
Hey, thanks, you guys. I appreciate it. So just to jump in real quick, if we're looking at, and that's kind of why I was asking Joe if that's the new normal. If you look at a year ago, the median price for Kona was 1.277. And a lot of people said, I'm jumping out for now. I'm going to wait for the prices to come, the interest rates to come down, and we'll deal with it when that happens. So if you waited right now, the median price in Kona right now is 1.5 million.
Oh boy.
Median price for a home. And so that's up 17.3%. And we are looking at the numbers. The number of homes sold are up 20% right now. So the number of sales are going up, the price is going up. The inventory is staying about the same. We're at 94 today. We've been in 90s for 6 months now. We did break 100, but we should be at 160 to 180 in a normal market. So we're still down on that. With condos, we're still down on the inventory on condos. The actual number of condos that sold has actually dropped 11%, but the median price on the condos has jumped up 11%. So they've gone 11% down in sales and 11% up in price. So they would have been 580 a year ago, and they're 645 right now.
645. Okay. Median.
And same thing, we got 81, I think, active right now, and we should have about 135 active right now.
Okay. And then so you're seeing an inventory jump of 20% for single family homes. Is that what
no, the inventory we're about 90%. We're seeing it 35% or 20% uptick in the amount of homes sold.
Okay. Yeah,
from a year ago. So we slowed down when the interest rates were high a year ago, and we all thought that was going to bring prices down, and they've gone up 17%.
Yeah, that's okay. So those people who were waiting, it still has gone up. So yeah. And so any prognostication in terms of demand that you might be seeing that would keep making the prices go up, right? Are there more buyers coming in with more money? What's the story?
Well, yeah. So the median sale to original price is at 97%. Is the median sale to original price. I did something different this time. I went and ran because we've always talked about, well, if the median price is 1.5, are there any affordable homes left? So I ran from the beginning of the year till today, till an hour ago. I ran the numbers. There's been 31 homes that have sold under $1 million since the beginning of the year.
Sold under $1 million? Okay.
Yeah, so the median price of those 31 homes was 890,000.
Mm-hmm.
The sale to original price median was 100, or I'm sorry, 97%. I highlighted the wrong column there, 97%. So that's running about with the whole normal there. We are looking at the median days on market were 21 days for that.
Okay.
And I did this because I had a listing appointment, 2 listing appointments in the last week. So it was kind of important with the stuff that's going on with the NAR settlement proposal and things like that. We're already starting to have that commission conversation. So I wanted to look at what was happening with that and what the homes in that price point, how much are they selling for, and what are they being financed? Are they cash? Are they VA loans? Because that's going to be important when a seller makes his decision if he's going to offer compensation to the buyer's agent. So of those 31 homes, it was interesting. 6 of them were cash.
Mm-hmm.
And 3 of them were VA loans. So those VA loans, those 3, for people that don't understand a VA loan, a VA buyer is not allowed to pay any of the closing costs. So that person would not have been able to pay his buyer's agent at that point, which just he couldn't get the loan, period. In the others, now they're all offered compensation. They ranged anywhere from 2.5 to 3. It was a typical what you saw out there for that buyer's agent. And so that left us with 22 that were a conventional loan they ended up paying. So that buyer's agent fee was financed in that part of the loan. So, it's interesting when people have that conversation about what's going to happen and the world's changed and NAR is telling people what they can charge and can't charge. And that's never been there. The NAR doesn't set commissions. It has nothing to do with it. So it's interesting for somebody to come in and understand what's going to happen with that commission. We saw it on your newbie page, right? You saw some of the comments there, and it was interesting what people were thinking. So they've always paid, or typically always have paid. It's always been negotiable. They don't have to pay. They could not. We do see it staying the same in the future. It will no longer be allowed to be in the MLS itself, which is going to make it a little bit more difficult. We thought it was pretty transparent when a buyer could see how much their agent was making. It was all public. And that's going away. So that's going to be a little bit of a it's going to be hard. It's going to be hard. The transparency goes away.
Mm-hmm. In fact, when what we talked about before, you guys got a chance to hear the whole statistics aspect, is that we were going to touch upon that a lot of people have been hearing in the media that NAR is going to not be allowed to have all the realtors in America charge 6% any longer. And we're looking at saying that is not how that's always worked. And so Lance touched upon the fact that it's always been negotiable, and what we're calling it basically is commission decoupling. So therefore, the seller will pay their agent, and the buyers will have their agent pay for their work. And then also the fact that you can't see on the MLS exactly how much people are getting paid in terms of what they're going to be offering. Those are the 2 things for sure that are going to happen in July, just so you guys know. And so then we were also talking about the fact that I've heard people say, well, maybe I'll wait. So I don't have to pay a buyer, a seller's commission 6% or whatever they would negotiate. And we were talking about the value of marketing still. And so that is not going, for the most part, our company's basically saying it's not going to change too much because people still have to buy houses. They still should use a professional. The professionals deserve to get paid, and that just the way that it's going about is going to be changing the most. So, if people here in our little group here, do you guys want to weigh in on what you're hearing and what you want people to know about this experience that's happening? Everyone's like, okay, I'm not too sure, but Andy, you were part of the conversation. We were kind of having a little chat before us. I mean, do you see it actually having an impact on your business? I mean, I know that you kick your ass and you tell people how hard you work because you're driving all over the place. But I mean, what's going to happen in your life?
No, I don't know. I regularly get buyer representation agreements because me, more than probably most agents, I charge buyers buyers will bring money to the table often. And that's because a lot of the transactions I do might be low dollar transactions. And there's only a certain amount of, there's a certain amount of money I want to make to represent a buyer, So when you look at the cost of what it costs me to run my business, and I just explained to the buyer, it's all about communicating value and service. So I'm used to having the conversation, not just here, but when I sold real estate in Oregon, oftentimes a buyer would bring money to the table for any given transaction. And I just had one, it wasn't just, I closed a property last year. I don't know, I want to say it was September-ish or so in HPP. The buyers brought 20 grand to the table because the listing brokerage was doing 1% to the buyer's agent. So talk about what that means. Okay, so what's the trade-off for a buyer? We talk about, do you want you might have someone that doesn't want to pay, and they're going to say, "Oh, but I need a lender. Can you get it with a lender?" Well, I could if you hired me.
Yeah.
We think about the types of information I freely give to people. I just, I have to rethink that whole thing about that, because those all become part of the value proposition that I give to clients. But I don't really see that being a big issue. We talk with sellers and they're like, well, I don't want to pay, I don't really want to, offer, compensation to the other agent, to the buyer's agent, because I've seen arguments. Well, why should I pay for somebody to argue against me, representing the other party? I think it's not really, I mean, you should hold through all of that, and my response is, well, the agents are going to be human, regardless of what the rule is. The agents, they need to get compensated. And so they might have a buyer that says, I only want to see properties where I don't have to bring money to the table because I'm a VA buyer, I'm an FHA loan buyer. I don't have the money, so that can just eliminate a number of properties. On the other hand, I do have the conversation with sellers now, and I've had sellers tell me, no, I want to make sure that we do get the right buyers, so we do want to pay compensation. So I don't know. I think that, will it really affect me? I think less than most, because I know there's a lot of agents, when regardless of what brokerage they're in, they don't have the conversation regarding buyer representation agreement. They wing it, or they they'll build it in later, like when they're going to present the offer. Oh, let me just slide all that in. So we kind of have to see how that's going to go.
In fact, if people are watching this and they don't know what a buyer's representation agreement is, you're going to find out, because it's going to be as much as realtors sign listing agreements with the sellers. Basically, it's an agreement that will go between realtors and buyers also to make sure that they understand the whole process. And so that's what we're talking about in the industry right now, is making sure that the consumer understands the value on both sides of listing and selling, and what we bring to the table. And like Leandy said, you probably take it for granted that we're going to give you someone like a Joe who's going to save your life and help you get into a home. And that's part of what we do, is we have relationships with other people in the industry that make the transaction easier on both sides. So, but also,
yeah, Julie, I was just going to mention, I think one of the things that's kind of being overlooked is the impact this is going to have on buyers, both VA buyers, first-time home buyers. There's going to be a lot of people that can't afford to pay for professional, or feel like they don't need to, and it's too much of a stretch. And I think there's going to be a lot of people trying to do transactions unrepresented, which is, it's not good for anybody. It's not good for listing agents, sellers, and buyers not to have representation. I think it's going to hurt a lot of buyers in the long run.
Well, I think I've heard where people say, well, I think I'll get a real estate attorney instead.
Yeah.
Okay, well, the real estate attorney is not going to do all the negotiation for you. They're not going to go to your inspections.
right.
I mean,
Get out of the market.
I've spoken to agents that sell in attorney states, the attorney can draft the contract, the attorney can go to closing, but that's kind of it. And there's so much more that the agent representing the buyer or the seller will do. It's being there for the inspections, negotiating. What happens if you've got a pest inspection? You need to negotiate repairs or negotiate credits or concessions. Attorneys don't do any of that.
Right.
They don't do any of that. That's not their bailiwick. They're, sure, I think you probably get an attorney for less depending on what you're buying, but will you really get representation? And I think it'll be a piecemeal thing at best.
Mhm.
I think about how many times like we've kept a deal together, like you've been in and there's certain subdivisions that are known where the concrete has spalling, from it's pretty common. I know if I go to show a home there, I'm going to walk the buyer around the house and say, this subdivision had a problem. It was built in the 1990s. You'll see the spalling in the foundation. It's not a big deal. There's a guy that can come take care of that. We'll get a credit. We've seen that. We don't even we want a home inspectors to inspect it, but I want you to know as a buyer right now that I've sold 20 homes in the subdivision and here's common problems. Let's negotiate this into our price right now. Let's ask for a $5,000 credit to fix that foundation, right? And that's another thing that your real estate attorney is not going to have the experience at and not be able to tell you that. So, and same thing with roofing. I bet you, everybody's got a story of how you held together a deal that may seem just enormous to a buyer. And you've got the knowledge to say, no, let me just call Ron over at the roofing company and have him over here. And, he'll do a drone over, he'll drive by, throw a drone over your roof and give us an estimate by lunch tomorrow. Right. So it's important.
The other issue is even right from the get-go, somebody wants to go look at property and having to sign the buyer representation agreement to go show them a home, whether it's showing them one home, showing a representation agreement to show them for 3 days. But really, it's, they like say, well, I don't want to sign anything. Then how are they going to look at anything? Well, they can go to open house, but that's kind of about it.
Mhm.
Yeah. Yeah, because it's going to be required, right? In July, it's required you have to have that buyer's agreement. Whether the settlement goes through or not.
I think it says like even before showing it's not even like before writing, it's before showing. You have to have that in writing, which is pretty stringent.
I mean, as a listing agent, you should be asking that question when they call you for listing, right? For showing. Do you have your buyer's agreement signed?
Mm. Yeah. And what was for you guys to know that we'll be talking about more of this as it gets into, because the whole thing has to be approved. The settlement needs to be approved by the courts to actually give us the marching orders of what's going to happen next. But we wanted to bring this up now to you guys because it's being discussed around the United States in terms of what's really true and what's going to happen. We were joking that says that just because we're lowering, what we think is lowering our commissions is not going to affect affordable housing and the prices of housing are not going to come down because of this. Lots of speculation going on there. But the good news is that, when you get a chance to talk to agents, like that's what I love about my team, is that having the years of experience and the extra service and expertise that they bring to the transaction to make sure that things go smoothly. People don't realize how unsmoothly things can go when you don't have people who understand how to handle both sides of the transaction, the things that you need to know. So, but also I wanted to talk to you real quick about the insurance crisis that the state of Hawaii is currently facing. We after what happened with Lahaina, the spotlight on Hawaii was put together by the insurance industry, and some of them the insurance carriers are pulling out of Hawaii. And Amber had talked about that happening with the lava zone experience, and just like 5 or 6 months ago, and now it's turned into people are getting notices across the entire state of their insurance carrier dropping them. And we have seen actually here on the island, HOA fees have gone up because their insurance carriers are raising the fees. And so I wanted just to kind of like bring that up and see if anybody wants to talk about that, what they've been seeing, because that is having an effect on housing. So
I've seen over. Oh, go ahead, Andy. Sorry, go ahead.
I had seen, it's been quite a while when I got together with a working group of mostly Leilani Estates residents
Mhm.
Over the insurance, because I had brought it up, and I think I mentioned this before, I brought it up to the insurance regulator that the really oppressive insurance rates for these high-risk lava zones were really putting a damper on the market.
Mhm.
You know, what are you going to do when people have a mortgage, but they can't afford the homeowner's insurance anymore because it's gone up so high? And you know, we're still kind of wading through that. The feedback I got from the insurance regulator was like, we don't work for the consumer, we work for the solvency of the insurance industry.
Mhm.
You know, and that was kind of like a slap in the face. You know, insurance rates, as was mentioned before, you know, the rate for so I showed a property in Leilani Estates to a husband, and he really, really wanted the property. The wife didn't want it. In the end, they didn't buy it. They decided they'd wait, and the property went into escrow, and somebody else bought it. And then I had found out what the insurance cost on that property was going to be, $8,100
A year.
a year. And I told my guy, I'm like, I think you dodged a bullet, because right now they're really, he goes, well, that's just stupid crazy. We wouldn't carry insurance. They'd pay cash for it, but they wouldn't carry insurance. And that was for a home that was like, I don't know, 460,000 or something like that. It wasn't like a really high priced home. It was like, you know, I mean, it's a pretty solid price for that neighborhood, just because they get pummeled by the cost of homeowners insurance. But yeah, we're seeing it across the board. I'm waiting to see, because I live in Lava Zone 2 on the west side. I'm waiting to see whether or not my carrier will cancel me or not. And if they do, I probably won't carry insurance,
Yeah.
because my insurance is HPIA, and I pay right now, I pay under $600 a year in HPIA. I know it's going to be close to 55, and that's stupid.
Yeah. Well, I've heard that the state legislature is trying to put together an emergency fix, much like they did when Hurricane Iniki happened across the island, when they lost a lot of insurance on that too. So they're trying to offer something, but as we all know, when they get involved, usually what they offer is not cheap either.
You know, what's interesting too is like during Niki, right? The money came from several different areas to offset the insurance. So there was a fee at closing when you closed your deal. There was a fee from the mortgage company that was paid when they did the mortgage, and the insurers actually paid a fee. And so with this new one that came out, the insurers have written themselves out of participating in this fund, which is that's why we're against it. We want to see something happen, you know, but there's two things wrong with that. Is it's a band-aid because it doesn't take care of the problem. The reason that a lot of these buildings are underinsured is because they're older and they're not maintained as well. And so they haven't had, you know, these insurers are coming in, and of course, hurricane insurance is a big one, but you know, with different problems with the pipes. You know, they look at when was the last time the pipes in these 70-year-old buildings were changed, and it's like they weren't. And they know that now you're going to have five floors of flooding on Oahu, you know, when something goes out on an upper floor. So if we put this Band-Aid on there, then we're not taking care of the problem that the HOAs need to take care of their buildings. You know, we're just subsidizing somebody else. And if it's paid for during a mortgage and things like that, the cash buyers are getting free insurance. They're not participating in it. So there's a lot of there's a lot of
You're figuring out to fix something, and all of a sudden you go, okay, let's dig a little deeper on that one. Okay, so that's kind of stuck there. And then also we've been talking about the TAR experience, you know, for quite a few months, and that's still kind of like finding its way through the the county legislature, but then also the state is kind of like coming up with ideas to try and deal with the short-term vacation rentals because of what happened in Maui, and then that people can't get housing in Maui. So if anybody, you know, Lance, you always seem to know kind of what's going on here more than a lot of people because you deal with a state basis. Is there something that people should be looking at right now, or is it all still in flux and nothing really is going to change until something actually happens?
There is a bill at the state. I haven't followed up on it this week, and I should have. I apologize. I wish I did. But you want to follow the state bill that is allowing. The state has allowed the counties, from the beginning, they've told the counties, you guys can best figure out where you need to have commercial zoning and rural and ag and things like that. Like the state doesn't need to figure that out. But when it came to residential, they made that equal across the state, and none of the counties have been able to touch that. And that is what is been it's helped us stop them from telling a homeowner that they can't rent out a room for less than 5 months is what they're trying to do now. So if you want to rent a room out less than 5 months, you're a short-term renter. And it's kind of crazy. So we're watching that bill closely, because what that bill at the state level is going to do is it's going to allow the counties now to start changing the residential zoning rules. So any county can go rogue with it and do whatever they want to do.
So they can look at a neighborhood and basically say you can't have any type of like short term, like it has to be 5 months, 6 months, whatever, or longer. And if you're, in fact, I just talked to somebody, she comes here 4 months out of the year. She's from Alaska, and she likes to have at least some time for herself and then also time for her family. And she said, well, what happens if I want to do anything else with my condo? I said, well, if they track it, then they're going to tell you how it's going to go, right? So it's going to have a lot of effect on people. And I told her about private property rights and that, when people buy a house, they should be able to do what they want. But if this comes into the regulations, then they're going to basically tell homeowners what they can and can't do with their own homes, right?
With your own bedroom in your own home, like our son comes home from the military for Christmas, things like that. We want to make sure that something's there. We're not at the point where we're renting out his room, but that is what a lot of families are having to do to offset the cost of living. I heard one of the council members made a comment that said, your poor planning has nothing to do with us getting rid of these vacation rentals. You should have planned better for your future. And I was just blown away. I'm like, are you kidding me? This is somebody that maybe has lost a husband, their son, their family member has moved off to the mainland that comes home for the holidays. They no longer have that income from the family. They don't want a long-term tenant in there, but they still want to have the room. So the county is trying to take that away. That's a big take. It's a huge take.
So
They always-
basically, okay.
They always talk about how it's all these off-island owners, and it's not all off-island owners. I mean, there's the people who've been living in places for generations. They're on a fixed income. Maybe they had a spouse pass away, and they no longer, they're really struggling to stay in the unit, stay in that house.
Right. And that's, I know some people who got here, they thought they retired comfortably and they realized it was so expensive to live here that it's not comfortable to live here, and they're trying to rent out rooms in their house. So yeah. So, I brought this up just because it's an issue that's affecting home ownership. And so I wanted you guys to know that when you see this show, we try and hit you guys with some issues that you might want to keep track of, and we'll put more information out as we get it. So, it's coming up in an hour, and I know people want to, wrap it up. But if you guys are looking for homes in all these different areas, obviously all of our people are amazing. They're experts in their neighborhoods, and I love the fact that they volunteer their time to give freely to the public on the information. And thank you guys all. And I put their information into the description below. We love them. We all sell real estate. My husband couldn't make it today, but be smart, use us. But we will see you guys next month in April, and we'll be probably doing this on the 18th of April. So everyone here, April 18th. And when you guys are on the YouTube channel, please feel free to run around the channel. We offer great information, and consider joining the Ohana, where we put you into a private Facebook group as well, so you guys can get more information and also updates on housing that listings that our people have. I know Delaney has got a new house that she's trying to sell as well, and we're going to put that information in below. And if any of the other agents are currently have listings, let's put those in there, and then people can get opportunity to see more of what we're offering as realtors on the island. So you guys be safe, a happy Easter, and we will see you in April.